Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on AT&T, ticker symbol T. Now for today's agenda, we're going to look at AT&T business segments. We're going to look at HBO Max and some expected growth in the future. We're going to look at AT&T's price history as well as their price performance versus their peers. We're going to look at the fundamentals, and I'm going to list some pros and cons. And lastly, I'm going to share my strategy as well as a price target for AT&T. Now, before we get started, please consider subscribing, like the video in the comments below. Tell me how you're using AT&T in your portfolio. Now, back to the content. All right, so for agenda item number 1, we're going to cover what AT&T does by going over their 3 segments. So for communication segment, we have mobility, business wireline, broadband, and video at $20 billion, $6 billion, $3 billion, and $7 billion, respectively, in each of those sub-segments. Next up, we got WarnerMedia bringing in $8.6 billion and Latin America at $1.5 billion. Now for 2020, the one bright spot on their balance sheet was mobility. It was actually the only sub-segment to actually have an increase of year-over-year revenue went from $18.7 billion to $20.1 billion. And they also had 6 million net adds on mobility. All right, so moving over to the broadband and video side of the house, you can see that there was a loss of revenue here from $11.2 billion in 2019 to $10.3 billion in 2020. This has really contributed to the video segment continue to lose cable subscribers year over year, and you can expect that to continue to happen. Now, they did see a decrease in the amount of people cutting the cord this past year. I mean, that might have been due to COVID and people being, really stuck at home. They attribute it to a better base of customers, a quality customers, but I'm not sure if that's the truth. Now, on the broadband side of the house, they actually had some positive news. They had over 1 million fiber net adds in 2020, and that's great news. Now, moving over to WarnerMedia segment, 2020 was a disaster for the movie industry. Revenue were down $1.8 billion in the WarnerMedia segment. It went from $9.5 billion in 2019 down to $8.6 in 2020. Now, positives moving into 2021, AMC and Cinemark almost have all their theaters open at this point. So hopefully we'll start to see moviegoers and we'll see a positive increase on year over year from that 8.6 up. I expect that to be true. And then HBO Max expectations are high. And so we'll go a little bit more into that. Now, if we want to see growth inside of AT&T, we have to look directly at HBO Max. It offers some of the biggest potential that AT&T has in its pipeline, and so we need to talk about it a little bit more. So if we look at the growth between September and July of this last year, we can see that they added nearly 4 million users during that period. And then if you went from that September timeframe to the end of this past year, they added nearly 8 million new subscribers. Now, if you add up all their HBO Max and HBO subscriptions, by the end of 2021, they're hoping to be in between 67 and 70 million. Now that would mean they need to add another 26 million users just to meet that goal. Now, I don't know if that's possible. I think it's pretty ambitious. I sure hope they do as a shareholder. And then if you look at their 2025 goal, they're hoping that is in between 120 to 150 million. I just want to stop for a minute and appreciate HBO Max's competitors. We have Netflix, the behemoth in the room at 203 million subscribers. Disney Plus is caught on like wildfire and is sitting at over 100 million subscribers. Prime Video's coming in at third at 53.3 million subscribers. Hulu's at 39.4, and they've been in the game for a while. I think the two biggest competitors to HBO Max are the two newest is Peacock and Paramount Plus at 33 million subscribers and 8 million subscribers. Moving on to stock price, if we look at the 5-year chart, we can see that AT&T is near a 5-year low. Earlier this year, they hit $27 per share, and that kind of seems to be the floor right now. If you kind of look at this, my initial take when I look at this is that AT&T is a buy, but let's look at a larger time frame. Now, if we look at the last, let's say a little over 10 years, I drew three lines. I drew one at the top where it seemed like every time the stock price hit that, it dropped. That's around $40, $41. And then I drew kind of a bottom where in 2009, we had the Great Recession, bottomed out there. And then I drew a line kind of in the middle, and this is kind of where the current stock price is, just all the way across. And kind of what I've noticed of this is it seems like fairly majority of the time, I'd say roughly guessing here, 70% of the time, the stock price is above that middle line. Now, it took a great recession to get below that middle line, right, back in 2009. And it also took the pandemic to get to the current stock price, and it bottomed out at 27 in 2020. Now, I find that reassuring in the fact that it took a very major impact in the global stock market in order to bring AT&T's stock price down thus far, and it would take another large event to bring it down into that $25-ish range that it was in 2009. So I have some reasonable assurances that price won't go down much further from where it is. All right, so now let's look at AT&T's stock price performance versus its peers. Now, in purple, we have SPY, which I used as the index, and that was up 239% in the last 20 years. If we look at T-Mobile, now includes T-Mobile and Sprint, that's up 130%. Up 6% is Verizon, and actually negative is AT&T at negative 33%. If we move that forward to the 10-year performance, you can see that T-Mobile in the last 10 years is up 260. The index is up at 205%. T-Mobile or Verizon is up 55%, and AT&T is only down 5%. 5-year performance. So again, T-Mobile is leading the pack at 220. SPY is at 96%. Verizon, 10% or 13%. And AT&T is at negative 21. Now, if we look at the 1-year price performance, we can see that SPY and T-Mobile are roughly in that $43 range. And then we have Verizon at 1.12%, and AT&T, unsurprisingly, is still negative at 3.5%. Now, the whole reason why I wanted to go over different time frames for the performance versus peers was because I wanted to consistently show that Verizon and AT&T were consistently underperforming both the market as well as T-Mobile. Now, the only reason why I can rationalize this is because T-Mobile was broken into Sprint and T-Mobile, and they both had relatively good growth, and they had growth prospects. And so there was a premium, and they performed relatively in line with what the market performed. What I'm using is the SPY for this example. Now, all that to be gathered is that if AT&T cannot get growth inside the company organically or through some sort of merger or whatever, I don't suspect their future performance to be any different over what we've seen in these charts. And that's why HBO Max is so important to AT&T moving forward. All right, so moving into the fundamentals, it's really hard to compare this because AT&T had a loss for the year, and so all these numbers look terrible in comparison to Verizon and T-Mobile. So I'll just go flash those up for a second if you want to look at them and pause. I don't really have much insight to gain in this category as the numbers really just look terrible in comparison to their peers. All right, so let's move into the pros and cons. In the pros column, we have the dividend. Now, we haven't talked much about it. The coverage ratio is going to be under 60% this coming year. It's projected. Current yield is sitting around 6.9% annually, which is pretty solid for a dividend stock. HBO Max has solid potential. I think in the couple quarters, that's really where people are going to be focusing on these earning calls. And if we don't see growth there, it's not going to be good for AT&T. On the mobility business is solid. You can see that's $20 billion of their $46 billion in revenue. So we want to continue to see that to be healthy segment for them. We don't want to see a lot of attrition from Verizon or T-Mobile. On the cons section, you can see I've listed more cons than pros on this one. It's a historic underperformer to the market. If we look at that price versus peers, you can see that every year, if you look at a 20, 10, 5, 1 year, it's always performed actually negative. It's always performed under the market, but it's always been a negative performer in comparison even to itself. AT&T has high long-term debt. Now, this isn't a problem right now, but if they continue to keep building upon that debt level, it may put pressure on their cover ratio for their dividend, and that would really significantly impact the value of the stock. Another one is they continue to lose cable subscriptions, and that's just going to keep happening as the move to streaming services continues. So that's just a losing and dying business. On competition increasing in the core business, now this is really just with T-Mobile and Sprint merging. I know this is only a couple years old. I think there will be definitely some more pressure by that. So I don't know if it's going to impact their core business substantially, but it may put pressure and they may lose some business from that competition. But I typically like to think competition is good, but it could be bad in this case. And then on the con side, they only forecast 1% growth in 2021, even from a net really terrible year in 2020. So I find that disappointing, and that's why I put it on the con side. All right, so now I want to talk about my strategy of using AT&T in my portfolio. Now, in my brokerage account, where I'm trying to maximize capital appreciation, essentially what I'm using it as a substitute for cash. So if I don't have a high conviction, if I've moved out of a position and I don't know where to put the money yet, I'll put that money in AT&T with the expectation that at least I'm going to be getting some dividends in the short term. Now, I recognize there is some downside risk, and obviously putting it into a security, you take that risk on. I don't think it's a zero risk, just put it in there. As you can see, versus the price performance over the last 10, 20, and 5-year periods, it all was negative. But if you look at its stock price over the last 5 years, we're at pretty much a low point, and I have fairly good confidence that we have a pretty, the bottom is about $27 a share, indicating a 10% downside, and I'm okay assuming that risk. Now, I do believe AT&T does have some upside, and I believe that is going to be around $32 to $34 a share in the next 12 months. That's a 6 to 13-ish% upside on the stock. Now, while I'm not necessarily investing T for capital appreciation, I definitely wanted to provide that estimate on what I believe it can get to by the end of the year. And again, that floor is around $27 a share. Let me know your strategy on investing in T in the comments below. Please consider subscribing, like the video. Thank you so much for watching today's video on AT&T Stock Analysis. Frank Finance, out.